So we're delighted to be joined by James Anderson today, who, alongside Tom Slater at Baillie Gifford, manages the Scottish Mortgage Investment Trust. James, thanks very much for joining us today. I think Scottish Mortgage needs very little introduction. It's been one of the top performing London listed funds in the global sector over the last decade. This strong performance, along with some share issuance to meet investor demand, has led to the market cap growing to well in excess of 5.5 billion, and earlier this year it became a constituent of the FTSE 100 index. We view the strategy as quite differentiated from a number of the peers in the sector. They take a genuinely long-term approach to investments. It's high conviction, and the focus is very much on innovative businesses. I wanted to kick off, James, if you could just talk us through the types of characteristics you're looking for in a potential candidate for entry into your portfolio.
Yeah, that's a very interesting question because I think it goes to the heart of it. We have a strict policy of analysing every company on 10 questions. I won't trouble the audience with going through all 10, but what we're really looking for is firstly the ability to double in sales over the next 5 years, and then to have an understanding of how the company can carry on growing after that. Coupled with competitive advantage, I think that is absolutely the essence of it. And the frightening element is just how many companies in the world index that excludes. We're essentially looking for the top 5% of performers, which needs to equate to roughly 40% per annum growth in share price over the next 5 years. So standards are high.
So it is quite a high conviction portfolio. There's a reasonable allocations given to the likes of Amazon and Tesla, all in those top holdings. I guess one of the investor debates that often comes up is just on valuation and grounds. I wondered how you go about valuing a company with such big growth potential.
Yeah. Well, I'm pleased you put it in such neutral terms. We get very fed up with the notion that we're not interested in valuation. What we're not interested in is near-term price-earnings ratios, which we think tell you very little. The value of a company lies, as you well know, in the long-term generation of free cash flows. We try and value companies, not on a spot basis, but on trying to assess over the next 10 or even 15 years where those cash flows may take us. And we look at those in terms of probabilities rather than certainties. So I often call it growth at an unreasonable price. Sometimes, and we have to accept this risk, we will end up paying what looks like a ludicrously high amount for a company. But that is completely outweighed, given the asymmetry of returns, by being right about a certain number. And then they look absurdly cheap, unreasonable in that sense.
So maybe if we pick up on one of those, maybe Amazon, just a sort of current view, a lot going on in that business. Sort of where do you see things going with that one?
Well, I think it's a great example, not just because it has, as you know, been our longest-standing large holding, indeed largest holding, but because I think Jeff Bezos encapsulates those attitudes that we are looking for. To quote him, if you see a 10% chance of making 100 times your money, you should take it every time, even though you may well be wrong 90% of the time. And that constant urge for future opportunities, future competitive moats is extraordinarily strongly embodied. And, as you know, generally speaking, we find that it's much easier to see that happening in a company with a dedicated founder or family of founders surrounding the business. I think that it's also an encapsulation of being long-term. They are not worried. Indeed, they see it as their preeminent competitive advantage about short-term earnings. Have never paid attention to Wall Street, much to Wall Street, and indeed many journalists ire that happens. But the scale of the markets you're addressing, if you think that they've now added grocery to that, is truly unimaginable. And I think that it's best encapsulated even more by AWS, Amazon Web Services, which took a business which was not thought to have any competitive advantages, any real growth, to be potentially in itself the single greatest growth opportunity in the world. So we think it's perfectly conceivable that if we're patient, you will still see increases of several multiples in the capitalization of Amazon.
So Asia's been a sort of an opportunity set for you, China especially. It's a reasonable allocation in your portfolio. I wonder if you can maybe talk through some of the holdings in that, Tencent, Alibaba, all in your top 10. And also maybe as a secondary question, another kind of often cited question mark on that area of the market is just on governance and the standards of corporate governance. How what's your view in that area?
Well, I should stress that whether it be on governance or whether it be in selecting the companies in the first place and carrying on owning them, our standards are exactly the same wherever in the world. And I must confess, I think whether it be our own dear Britain or whether it be America, there are plenty of examples of misgoverned companies for us to not cast aspersions too hard on other people. But to some degree, I think the most interesting persistent pattern has been that we have found many more of these businesses in China than elsewhere, and in particular contrast with India, which, on macroeconomic grounds, many people are excited by it, but we find very few companies with genuine competitive advantage and which are managed for outside shareholders. So actually that contrast is very acute from our point of view. In the case of Tencent, I think it is the preeminent lesson of that quote from Michael Moritz, that the most difficult thing in the world is understanding how great a great company can be. And when we first bought Tencent, we were delighted we bought it, but looking back at our research, we never grasped just how large and how powerful this business can be. And I think it's worth stressing now that even Mark Zuckerberg will admit that what Tencent have done with WeChat is probably more sophisticated, more entrancing, more all-encompassing than what Facebook have managed. So we are certainly making no compromises in terms of opportunities and standards. I might just add, if there's a moment more to do this, that the linkages to us between West Coast America and East Coast China are now very intense. Many of the same people have been to the same universities, trained in the same way, they've had the same venture capitalists. So I think these companies are actually more similar to West Coast American companies than East Coast American companies are to West Coast American companies.
Maybe one final question. You've talked in depth previously about companies not needing to come to capital markets as early as they maybe have previously. And maybe just delving into that kind of unquoted part of the portfolio, which has grown modestly in recent years. Just maybe pick one company that you think has particular opportunity.
Well, we're very grateful, first thing to say, that shareholders have allowed us to do this. And it's not just any longer that these companies don't need access to capital, it's actually easy to invest when you are unquoted. I think at the moment, the one I would pick as an exemplar of that pattern is Spotify, which, as you probably know, is effectively only likely to come public at the point when it no longer needs capital. It may not even issue any capital in its IPO. And I think to defeat Apple, to defeat the big music labels, to globalise a business from Stockholm, has been an extraordinary achievement which could only be done in private markets. So we're very excited about where it's got to now and the characteristics it has. This is a huge market, obviously, and we hope that Daniel Ek is right in seeing this as the first 100 billion European internet technology platform.
James, very interesting as always. Thanks very much for coming in.
Thank you for your time.
If you'd like any further information on this Scottish Mortgage Investment Trust, please contact your investment manager for a copy of our recent research notes.